Bitcoin pulling back from a record-setting weekend. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Markets Managing Editor Lawrence Lewitinn and Global Macro Editor Emily Parker. Good morning, you two.
Good morning.
Good morning.
Wow, Bitcoin. What's up with some Bitcoin over the weekend, huh? Every time I looked at my mobile, it just kept going up.
It did until it just finally had to catch its breath. I mean, that's basically what we had. We had a large influx of a couple of $1 billion worth of Bitcoin going on to exchanges. There's something like $1.6 billion worth of Bitcoin alone going on to Gemini. That's taken as a sell signal. When you have something like that, it means large holders are looking to offload it somewhere. And you don't need to be a scuba diver to know to get out of the way when whales start dumping even a modest amount of Bitcoin here and there.
That's the story happening right now, Lawrence. We're seeing Bitcoin falling from its all-time high-setting weekend, peaking at a whopping 58,332 Sunday afternoon. The XBX Bitcoin price trading right now at 52,000, just above that level. Bitcoin is almost up 90% year-to-date, nevertheless. And Ether also retreating from breaching the $2,000 barrier on Saturday, touching a record of 2,036. The ETX Ether price trading at 1728 right now. It's down about, over 11% over the past 24 hours, but returns are up 150% year to date, according to trade block data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. So, Lawrence, your take on what's been going on?
Yeah, there's a little bit of a sense that the institutional players aren't snapping up enough of everything. As fast as it's being sold, and obviously it's not just Bitcoin, but it's also crypto. It's other crypto like Ether as well.
Right.
So
Speaking of Ether, Emily, on Saturday, Ether hit a major milestone, surpassing $2,000. This is a significant event for the Ethereum community.
Yeah, let's just talk about this for a second, because in a normal universe, Ether hitting $2,000 would have been a huge headline on its own. But now in this crazy market, it was just like kind of a blip. But this is a really big deal because Ether is not just following Bitcoin. There are some very specific things that are driving Ether's price up. For example, DeFi and staking and the CME, which our colleague Will Foxley wrote about this weekend.
All right. So, normally it would be a huge story, but we've just been having so much ridiculous news.
Just one story among many stories, yep.
All right, and joining us to discuss the crypto markets from New York is Muneeb Ali, CEO of Hero, formerly and better known as Blockstack. Welcome, Muneeb.
Hey, everyone. Glad to be here.
Good to have you. So, tell us about why you're rebranding from Blockstack to Hero, and can you tell us about your client base? Who is using your product and what for?
Yeah, so I think the rebrand is mostly for having less confusion between the open source project and the company. So both things were called Blockstack, and obviously, that could be confusing. So the project is Stacks, that's the blockchain that brings smart contracts to Bitcoin, and the company is a developer tooling company, Hero, which mostly sits in the background and mostly deals with developers.
And again, who is your client base? Who's using your product, and what are they using it for?
Yeah, so I think the thing that we are working on is there's this idea out there that Bitcoin is not programmable, or you cannot have smart contracts on top of Bitcoin, which is absolutely not true, right? So there are various ways of doing smart contracts. We have built kind of like the rest of the stack that you need to make Bitcoin programmable, to have decentralized applications and smart contracts directly on top of Bitcoin. You mentioned Ethereum right now. One of the big differences between Ethereum and Bitcoin is that Ethereum kind of has smart contracts baked into the base layer. So we bring that functionality to Bitcoin directly. And so the kind of developers who want to use the $1 trillion of Bitcoin that's available and deploy that in smart contracts is the target market.
But is anyone using it right now?
Yeah, so we have over 400 applications built on top. So they range all the way from decentralized like chat applications like Pravica or there are people building NFTs. Boom is a very interesting application where people are publishing NFTs on top of stacks and Bitcoin. So we've seen a lot of developer interest and are pretty excited about it.
So one thing that's interesting about what you just said is that these two concepts, smart contracts and DeFi, these are widely associated with Ethereum. And as you're pointing out, they can be applied to Bitcoin as well. The question is why? Like, why would you use Bitcoin for smart contracts or for DeFi? What are the advantages of using Bitcoin?
Yeah, so I think the first thing is just a larger liquidity pool. So imagine that Bitcoin, as I said, has $1 trillion of crypto capital, by far the largest crypto capital that's out there. And I think people have been trying to move that Bitcoin in wrapped assets to other blockchains. But a much more superior approach is if you bring the smart contracts to Bitcoin instead of the other way around, that you're trying to take Bitcoin as a synthetic asset to a blockchain like Ethereum or something else that has better smart contract functionality. So I think that's one thing. The other is actually the security of Bitcoin, right? Like we know that Bitcoin is by far the most secure asset, the most secure network. The proof of work of Bitcoin is very hard to kind of like match that. And the way you build smart contracts on Bitcoin, all those transactions are also then getting settled on Bitcoin, and they're backed by the guarantees of Bitcoin, which in my view is a much more secure way of doing things. Versus building on smaller networks that don't have that type of security, don't have that type of durability that we come to associate with Bitcoin itself.
Muneeb, you basically said that Silicon Valley doesn't quite get Bitcoin. These are the guys who are deepest in tech. So why aren't they sold that this is the money of the future? You know, why is Silicon Valley not seeing it? And why do you think you know better than they do, for instance? And by the way, is it just Bitcoin itself, or is it crypto in general?
I think Bitcoin is a little bit counterintuitive to Silicon Valley. So I've been in the industry since 2013, and I do think that there are certain investors, like Andreessen Horowitz or Union Square Ventures. So USB is a major investor behind Stack. They do get it. I don't think that, generally speaking, the Silicon Valley crowd has been able to understand Bitcoin fully, or even today, they don't fully understand the potential of Bitcoin. And I think some of the things that are counterintuitive are that in Silicon Valley, they would look at a technology and then they would try to build a next version of it or a better version of it. Whereas Bitcoin is kind of like the reverse of that. Bitcoin doesn't change. Bitcoin is valuable because it doesn't change, because it is durable, because it is very hard to modify it, right? And it's hard to wrap your head around a piece of technology which is going to become more and more valuable because of this property that is not going to change. And I think that throws off Silicon Valley. They try to build the next Bitcoin, but the idea here is that don't try to build the next Bitcoin, where you should be thinking about building on top of Bitcoin. Bitcoin is like TCP/IP, a very fundamental layer of this next generation internet. You're not going to change TCP/IP. Bitcoin, nobody can change Bitcoin or how many Bitcoin there are or how the core protocol works. What people should be thinking about is what is possible on top of Bitcoin. How do you program it? How do you build different things on top of this infrastructure?
Are they not sold on just Bitcoin alone, or is it in cryptocurrency entirely?
I think cryptocurrency definitely faces pushback. This market kind of like moves in circles, like in the sense that if there's a bull market, there will be a lot of interest. Then there's a bear market, and the interest kind of like fizzles out. But in Silicon Valley, again, I think it's a little bit counterintuitive. What people there are trained in is they would see a trend, it would either explode or it will go away. Right. So people who got interested in, say, Bitcoin and cryptocurrencies in 2013, when they saw it go away, their pattern matching algorithms would basically say, "Oh, this was a fad. It disappeared. Let me go and find the next big thing." But the crypto markets came back in 2017, and then they scratched their head. They're like, "What happened?" Right. And then they came back again in 2021. So I think they need to adjust their model. That this is not a social network that once it kind of like takes off, it just keeps going on with this rapid growth. These markets are cyclic, and they need to adapt their thinking behind how to approach crypto and Bitcoin in general.
So, Muneeb, what is your outlook for the crypto markets going forward?
I think it's going to be the best. It is entirely possible that this cycle is different from others. But if you look at the last two cycles, we roughly have, after a Bitcoin halving happens, we typically have a bull market. Like this is exactly when the 2013 bull market happened, when the 2017 bull market happened. Roughly the Bitcoin halving is when the start happens. And then roughly 1 year is when the bull market kind of lasts. And then there's again a bear market where a lot of the speculators, a lot of the people who want to write off these technologies, they write it off, they go away. But the true believers and the builders, they keep building. And the next time around, the market is like much, much bigger. But it's entirely possible that this time is different. This time we might actually go from, just early builders and early adopters to more mainstream audience. But we'll see. I think if you just look at the historically what has happened, I wouldn't be surprised if we remain in a bull market for 2021. And then again, there's a major correction like the ones that we saw in 2017 and before.
Some time ago, you, just to completely change topics here, some time ago, you tweeted something about how China was kind of where the crypto action was. And I'm just wondering, like, why you think that, and what's different about the crypto culture in China versus the US, for example?
Yeah, so I think broadly the Asian markets, they seem to be a lot more advanced. Like, first of all, for example, we have done a lot of work with the regulators. Stacks is the first crypto asset that was actually distributed through a SEC qualified offering. But that took us a long time and effort to do that. And a lot of people, in terms of regulations, are still kind of like not completely clear about how these offerings can happen, how these currencies can actually then trade as a non-security and so on. Again, our company has done a bunch of work there where Stacks has a clear legal framework for trading as a non-security in the US. But if you look at the Asian markets or other places, over there, the regulations are different, right? So people can actually move much faster. And also, like, I think, for example, if you look at South Korea, there's something like 60% or more of the retail market actually owns cryptocurrency, which is a huge market penetration compared to what we're seeing in the US. And people over there, it's also like if you look at other similar industries, like, gaming, for example, where people are spending a lot of money within games, like there is a culture of actually owning a lot of digital assets or ascribing a lot of value to them. Whereas if you look at the Western markets, I think from a culture perspective, like it's actually lagging a little bit in some of those things. And that's why I'm not surprised if the Asian markets are a little bit bigger than Western markets right now.
Right. So there's some catching up to do. All right. Thank you so much for joining us, Muneeb.
Absolutely. Thanks for having me.
That was Muneeb Ali in New York, the co-founder of Stacks and CEO of Hero, a developer tooling company in the decentralized Stacks ecosystem. Coming up, a discussion with crypto exchange OKCoin and why they are delisting Bitcoin Cash and Bitcoin SV. Welcome back. Checking in on Bitcoin, the XBX Bitcoin price continuing to retreat now just over $50,000. It's down about 12% over the past 24 hours. And the ETX Ether price also down, trading just below 1,700, also down 15% over the past 24 hours, according to TradeBlock data. And this time next week, investors will no longer be able to access Bitcoin Cash or Bitcoin SV on crypto exchange OKCoin. As one of the largest Bitcoin exchanges in the world, OKCoin is making this decision to prevent new customers from confusing these two forks of Bitcoin. Bitcoin Cash is a clone of Bitcoin with minor adjustments to increase block sizes. Bitcoin Satoshi's Vision, championed by Craig Wright, who is known for his claims to be the inventor of the original Bitcoin, is itself a fork of Bitcoin Cash. Joining us now to discuss is OKCoin Chief Operating Officer Jason Lau in Hong Kong. Welcome, Jason.
Hi, thanks for having me.
Jason, great to have you here. All right, so other crypto exchanges are not doing this. So why are investors only getting confused on your exchange on what BCH and BSV are? Why aren't they getting confused on other exchanges?
Yeah, so, I think it's good to take a little bit a step back to look back at, when BCH was forked off of Bitcoin in 2017, we did support BCH and did a lot of exchanges like you mentioned. And BSV, which came about later, was actually not as widely supported across the industry. Today, I would argue that most exchanges don't support BSV, while only a handful support BCH. So our stance has been, we've taken a bit of a market neutral stance. We wanted to let customers access these assets from the very beginning, and sort of let the market decide, right? We believe that the market should choose and have access to whatever crypto that they choose to invest in. However, recently, I think a few things have changed for us to make this decision. One is if you look at the value of BCH, the market cap value of BCH and BSV as compared to Bitcoin, it's basically been a one-way track downwards, right? I think BCH is worth something around 2% of Bitcoin today, and BSV maybe even less than that. And so from that metric, you can tell sort of the market activity and market interest wasn't there. And we see this on sort of user metrics on our platform too. Since December, in this recent bull run, all of our user metrics have increased quite dramatically. Everything across the board is up 5 to 10 times just since the end of last year, a couple months ago. And so a lot of these newcomers to the market are coming and looking to acquire Bitcoin, which is what they hear about on CoinDesk and other news and from their friends. No one is coming to talk about BCH or BSV. I think that's just a fallacy that.
But what do people who own Jason, BCH and BSV on your platform, what are they going to do now?
Yes, so we announced a delisting, which will happen on March 1st. So there is time for people to sell if they would like to. But also, we allow them to withdraw their tokens. They are free to take them off to another exchange or put it in their own wallet.
Have you heard from BSV investors? Have you heard from Craig Wright? How's he taking it? And do you have to refer to him as Mr. Nakamoto when you talk to him?
On the first question, we have been in touch with both the BCH and BSV community. I think there are many of us, and it's a bit of a debate too internally, so it's not as clear cut. But a lot of us do support that. People in those communities are building tools and building applications to serve their community. We just think that branding and that sort of is easily misleads newcomers, especially newcomers to our space. And then to your question about Craig Wright, no, we have no contact with Craig Wright.
Let's just turn the conversation to China for a moment. So I know that OKCoin and OKX are separate, and that's correct, right? So OKCoin is primarily not for the Chinese market, but I think you would still have some perspective on the Chinese market. And as you know, it's very hard to get geographical data on China, just to get a sense of the scale of the Chinese market. How big a role do you think the Chinese market has been playing in this bull run? I mean, how many do you think Chinese retail investors, institutional investors are a really important part of what's going on now?
Absolutely. I think Munib highlighted the importance of Asia in general earlier, but China is a huge part of that. And mostly because of historic reasons also, China was one of the earliest countries really to embrace Bitcoin and embrace crypto. Yes, there are some people that argue most of that embracing was due to the speculative or trading nature of these assets. But, I think having been to China a lot over the past 5 years working here, it's a very normal conversational topic. And it is legal in China, right? It is any individual has the right, the legal right to own and transact in cryptocurrencies or digital assets. So it is a vibrant space, I would say, and there's a lot of community and a lot of building actually that happens there. A lot of the developers are actually out there. Also, I think there is definitely a bit of a gap between Western understanding and sort of the Chinese perspective, but I think that's a I don't know if I'm the perfect person to bridge that.
Yeah, just to quickly follow up on that, though, I think you're right about the Western misunderstanding, because a lot of people in the U.S. think like Bitcoin is banned in China or crypto is banned in China. What we do know is that they did crack down on exchanges in 2017. So can you just explain quite simply like how most Chinese people buy and sell crypto?
Yes. So like you mentioned, in 2017, the government sort of tapped everyone on the shoulder and said, hey, look, this ICO craze is getting out of hand. And they chose to go to the exchanges that offered something very similar to what we would offer here in the U.S. You could use your bank account and said, hey, look, no more of this. So today, a lot of this activity is done a little bit off, I would say off sort of these exchanges and in a more peer-to-peer fashion. There are sites and marketplaces where users can find counterparties and trade, especially via and settle fiat or renminbi via WeChat or Alipay methods. So there still is a very vibrant economy there.
How much of your business is retail versus institutional, and where are you looking to expand and why?
Yeah, so I would say our business mix is, maybe 60% institutional today, I would say. I don't have the latest stats because, like I mentioned, we have seen an incredible run up of new joiners over the past couple months. And I think the United States is a new area for us. We're actually now headquartered in San Francisco. This is something over the past 2 years. And so the U.S. is a huge market for us. We've actually been the first U.S. exchange to work with the Stacks team. Munib was just on earlier. And so we've seen, again, a great sort of a lot of users looking to acquire Stacks. And also we support some of the Stacks ecosystem by providing things like stacking, which is committing your Stacks token to earn Bitcoin. Yeah. And users are finding these ways of using and earning and managing crypto very attractive here in the US as well as around the world.
Right. Thank you so much, Jason, for your insights and your update on OKCoin.
Thank you.
All right. That was Jason Lau, the COO of OKCoin in Hong Kong. Coming up, My Ether Wallet joins us to discuss Ether's ascent and the exploding DeFi market, and checking in with CoinDesk regulatory reporter Nick Day.
I can't think of a more important story than this one to be telling. We're talking about the transformation of money itself. So to tell this story, right, the most significant story in finance that's around, we need new mediums, new ways to reach people, new ways to reach this global audience, the human beings for whom this is going to be most important. So this is why we're really excited to launch CoinDesk TV, because it's another way to reach people. It's another way to communicate. It brings to life the stories that sometimes can be difficult to access. This is a huge opportunity to tell a very, very important story that reaches a wide audience that has the potential to change everything. This is a huge opportunity to do this differently, and CoinDesk TV is going to sit right in the middle of all of that.
Welcome back. Time to check in with CoinDesk regulatory reporter Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good Monday morning to you, Nick.
Hey, happy Monday.
Hope you had a good weekend.
Yeah, it's going to be a pretty busy week. Just tomorrow, we've got a couple of hearings that are worth paying attention to. Federal Reserve Chair Jerome Powell will be speaking to the entire House Financial Services Committee about the state of the economy. The Congress is still working through the stimulus bill, so we should see more details and get a better sense of when that might be passed, hopefully in the coming days. On Thursday, a House Financial Services Subcommittee is going to be holding a hearing on crypto and I should be more accurate. They're holding a hearing on financing of terror in the wake of the domestic insurrection on January 6th. My expectation is that crypto will come up given the Bitcoin transaction that was sent to some of the figures present at that insurrection in December. And then tomorrow we're actually seeing a second hearing. This is going to be a court hearing for Virgil Griffith. That will be tomorrow afternoon. CoinDesk is, I think, planning on covering all of this. My colleague Nate DiCamillo plans to live tweet the hearing tomorrow for Jerome Powell. And I, of course, will be following the other Financial Services Committee hearing.
So you in the past have pointed out this growing mention of this tie between crypto and terror financing. Is this something that signifies some sort of change in U.S. regulatory attitudes towards crypto?
I'm not sure if it's a firm change yet, but it has been coming up a lot, especially in the last month and a half or so. Treasury Secretary Janet Yellen has mentioned it at least 3 times now. We've got Congress men and women sending letters to companies like DLive asking about their role in what happened on January 6th. We know for sure that the FBI and FinCEN's investigating $500,000 in Bitcoin sent to some far-right figures ahead of the insurrection. So there definitely seems to be a lot of attention being focused on whether or not there is a connection here. And I don't know yet where that'll land up.
All right. Thank you very much. It's a busy week, Nick. Thanks for your update. All right, that was CoinDesk regulatory reporter Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. The decentralized finance market is seeing exponential growth. In the past 12 months, total locked value in the DeFi ecosystem has grown from just under $1 billion to $40.5 billion today, according to DeFi Pulse. Joining us now to discuss is My Ether Wallet COO Brian Norton in Los Angeles. Welcome, Brian.
Hi, thanks for having me.
Great to have you here. All right, so Brian, in 2017, Mu had trouble handling the whole ICO boom. A big factor on whether or not investors could get in on an ICO was whether Mu was working for them. So are you having the same kind of problems handling the DeFi explosion?
No, thankfully we've grown up quite a bit since 2017. In 2017, My Ether Wallet was still very much a hobby project. It was just a team of 2 trying to do their best to take on this surge of people coming in. Since then, we're now a team of 17 full-time employees, and so the taking on that kind of onslaught has been a little bit easier for us this time around. I think what we see now is that people actually coming back from that era. One of the big things that we've seen over the course of since the beginning of the year is a lot of older users who maybe generated a wallet on Mu in 2017 and are coming back to a tool that that has been enhanced a lot. There's been a lot of user experience kind of optimizations, and they look at it and it doesn't look like the hard, cold developer tool that My Ether Wallet started as. And so we get a lot of people coming in saying, okay, how do I get into DeFi? How do I do that? How do I even unlock my wallet? And so we're dealing with a lot of old school people coming back in and trying to get in on the craze.
While we're talking about ICOs, not to compare DeFi to ICOs, but DeFi is a little bit of a buyer beware kind of market in the sense that there's a lot of new projects. They're harder to understand. So is there the risk that a lot of investors are going to get burned this time around just by not knowing what they're doing and jumping into DeFi without the proper knowledge? And how do you prevent that?
That is a concern, as always. I mean, but with everything with crypto, there is there's the mantra: do your own research. And sometimes when you've done do your own research, stop and then do a little bit more. But with the DeFi craze, I think that at least with our usership, we've been very careful about what we introduce into the site in terms of native integrations. So we have native integrations through the website of MakerDAO and Aave, and we've since the mobile app, we've added some featured dApps to our new dApp browser, and we're kind of slowly giving our usership more and more access to these tools. And we're going first with the ones that are battle tested. Aave has been in the space for a long time. They haven't experienced any sort of any significant setbacks. They're a strong team, and so we can introduce our users to these things with the knowledge that they're going to be able to get their feet wet. They're going to understand sort of the fundamentals of how borrowing, lending, taking on leverage positions works, and then they can educate themselves about what else is happening, the more sort of complex crypto economic systems that are being sort of introduced on the Ethereum ecosystem.
So without holding your feet to the fire, of course, and not expecting a definitive answer on this one, but how much time do you think we need for DeFi to stay in this kind of experimental stage still? When does it go prime time? And of course, what does it mean for assets like Ether itself in terms of demand?
Well, I think that DeFi is going to remain a driver for demand for Ethereum for the long term. I think we're only still seeing the beginning there. But your question's well met. Like, how long does the experimental phase last? And there isn't an easy answer for that. This ecosystem is built on open source software. You can deploy you can test in production, and I've said this before. A lot of great projects have been tested in production on Ether with real live assets, with real users, staking their actual portfolios in these products, and they've been very, very successful. But for new blood coming into this ecosystem, you really have to be careful about educating users about what is good, like what has been battle tested.
Right.
And so, I'm sorry, I can't put a firm end date on when that's going to end. But I will say that I think that what has emerged over the course of the last year is very, very strong fundamental projects that users can go into with a relative feeling of trust that these projects are being maintained, and that.
Yeah, no, that makes sense. Thank you so much, Brian, for your time. Unfortunately, we have to wrap up the show, but again, thank you for your insights on DeFi. All right, that was MyEther COO Brian Norton in Los Angeles. All right, so that's our show. Thanks for joining us on First Mover. Coming up is special guest coming up tomorrow is Paxos CEO Charles Cascarella. Thank you, Emily Parker, our CoinDesk Global Macro Editor, and Lawrence Lewitinn, Markets Managing Editor. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.